High price stocks do not attract traders, and that is a good opportunity if you really think through this particular kind of stocks. Low price stocks attract traders for the invariable reason that low price stocks tend to make very explosive moves. But high price stocks are a different animal and they behave differently. Lower price stocks have higher volatility. That means when they move very big. As a result, you need wider stock to make money when you are trading lower price stocks. Higher price stocks tend to move with a lower volatility because most of the traders or the money which is going into higher price stocks is not really active traders. It's more institutional, it's more like an established players. And most of the traders are scared of high price stocks because they think that look at it, that's not where they want to put like they are just not even willing to look at the opportunity in high price stocks. But one of the key opportunity in high price stocks is the ability to get in with a very low risk. Very most of the high price stocks kind of a trading which I do is where I can get in into a trade with a risk of less than 2%, many times even 1%, because high price stocks don't move so rapidly. But then that's where the opportunity is. You can risk $5 and make $50 because they move in increments of 50 to 100 or $200. So let's look at some of the examples of these kind of stocks where you can find an opportunity very easily and your risk is not very high. And this is a distinct opportunity in the market for the right kind of a trader who wants to look at it in detail and find these low risk kind of opportunities and really understand the game of trading high price stocks. So let's look at like Goldman Sachs as an example of a recent move where this was a breakout. And in this particular breakout, when you look at it, this was like basically on this particular day, there was a clear breakout, right? And on that breakout day, the stock was up only 1.80%. So for a $6 kind of a risk, the stock went up $35. And that's the kind of trades which you can find in these high price stocks where you can risk less than 1%, 2% and make move. One of the good trades which I did a couple of weeks ago was in Booking. And Booking is a very high price stock, which typically it's one of the highest price stocks, scares people. In this particular thing, one of the things was I always trade high price stocks. I'm always on top of high price stocks. I always know if a high price stock is setting up. So I had seen this first leg and I'd seen this. There was a small pause. So I was watching this particular stock and I got in here and with a $10 stop for the next 3 days, the stock went up $116. And the risk was so small because the stock was when I entered was just like an up less than 1%. And those kind of opportunities where you can put a stop which is so close is what you will find again and again in stocks like this. Chipotle Mexican Grill this day is up 1%. And from there it goes on to make around $267 moves. And in dollar terms, it is $21. So you risk $20 and you make $267. That's a lot of money. So these kind of opportunities, if you look at and if you study again, you have to study and you have to build a method around these things. Lower price stocks is where everybody is attracted to. But this is a stock where 1.93% breakout happened. And from there, it went on to make $75 move. So in order to trade something like this, you have to think in terms of dollars, not in terms of percentage move. The advantage of some of these kind of stocks, like BlackRock is a good example of like another breakout here where it was 2.02%. And you can put in a lot of capital to work. And with a small risk in terms of percentage, it allows you to put a lot more capital to work. So the opportunity in high price stocks is for somebody who wants to operate with very low risk and try and capture dollars in multiples. Like you risk $10 and you end up making 116, 120 or $200. Sometimes you risk $20, you make 267, $300. So uh, these are very good and neglected opportunity in the market. And whenever you find something which is not widely used by traders, is where you can find an opportunity to make money with a very low risk kind of a thing. Again, Netflix is a good example of that. Here, there is a breakout in Netflix, and it's only up 2.78% on that particular day. And then with a small risk, it goes up $35. So you risk, say, around $12 and you make $35. That's a lot of money. And this kind of an opportunity exists in the market. And the reason why many traders don't focus on is because they are enamored by low price stocks. So if you want to do this kind of a trading, what you can do is just focus on the top 100 stocks ranked by price and keep an eye on them and become an expert in finding a low risk opportunities in them. So every day in the morning, I come in and I sort my list by highest price, and I just go through these stocks, which are like, this is sorted by highest price, and booking is the highest price. Obviously, there's a liquidity condition which I use, and I just look at stocks which is setting up nicely, and if it is likely to break out, then I watch it, and if I can get in with just 1% or half a percent or 2% stock, that gives you a very good risk reward ratio opportunities. Like say AVGO is now having very orderly consolidation, and continuously keeping a focus on these stocks is one of the set of ideas which I developed over the years. And this is not my idea. This is something which I learned from a Stockbee member who's opened my eyes to this kind of opportunities. And subsequently, I went deeper into it and made this into one of my set of ideas, which I called FHP, or focus on high price stock. So if you want an opportunity in the market which is very low risk and high reward opportunities, yeah, focus on high price stocks.